And welcome back to Reverse Your Thinking. My guest this afternoon needs no introduction, but we'll give him one anyway. His name is Sergio Altomare. He is the co-founder and CEO of Hearthfire Holdings, a real estate private equity and development company with more than $180 million of self-storage assets. Yeah, you heard me. Self-storage assets under management and a 9 exit track record averaging over 25% return. With a career of excellence in central banking and technology, he brings financial, investment, and IT skills to apply to real estate and business opportunities. A former executive director of technology at the Federal Reserve, yeah, you heard me, that's the government, Sergio has directed impactful technology products and is a subject matter expert when it comes to systems architecture, cybersecurity, and strategic planning. He also is a graduate of Drexel University, summa cum laude, which even beats me, and a former licensed realtor in the state of Pennsylvania. Sergio, thank you so much for making time to see us today.
Mathius, thank you so much for having me. Glad to be
It's
on the show.
absolute pleasure. So maybe the best thing for our audience would be to give us a little bit more, fill in a little bit more background of sort of like where you started, how you got to where you
Sure.
are, and what the significance is. All right, what the significance is of Hearthfire Holdings with regard to self-storage assets and investment opportunity.
Yeah, sure. So fitting well with the program and your audience is I've always been a bit of a contrarian thinker. My history and my background has always been one of extreme curiosity and asking a lot of questions, right? Challenging assumptions, challenging what we know about our world, what we know about ourselves, what we think we know about ourselves, and really kind of framing our contribution and value that we provide in our lives accordingly. My background goes back to won't bore you with the high school details, but I started working at the Federal Reserve when I was 18. At the time, I was not
Oh,
college material, simply because I learned how to beat the system as opposed to really focus and really optimize my high school education. And so I started working at the Federal Reserve at an early age. I quickly, this was back in the early 90s when I found my way in front of a computer, and really I bought a computer that was made by AT&T, and not 2 months later the computer AT&T stopped making computers. And I bought the computer in Delaware, so I was smart enough there because I wanted to save on taxes, and but I had nothing but problems. So fast forward, and I became very interested in ripping apart and putting computers and systems, for that matter, back together. I navigated my way through the Federal Reserve. It was a great organization to provide a lot of growth and a lot of opportunity, and I took every bit of advantage of it.
uh-huh.
Along the way, I had firsthand experience to a lot of economic cycles, right? Growth cycles and then market downturns. And it wasn't long before in 2000 and Y2K, we saw some of the market challenges there. We saw the dot-com bubble. I saw, knew of the savings and loan crisis and all of that. So I became interested in finance and my financial health. And I started investing in the stock market at an early age. And eventually that turned into real estate investing. And it started with multifamily, right, in my multifamily properties in my backyard.
Mhm.
Started then raising money from friends and family when they saw that my wife and I, had the systems to be able to build and scale a platform, and we've been doing it ever since. And I quit the working at the day job back in 2017. So
Mhm.
this has been full time since then, and our focus now is to provide the best growth and income investment products that we can for everyday citizens and now family offices. And of course, along the way, when you have over 250 investors, I learn a lot about wealth and more importantly is purpose, right? Is wealth and financial freedom and all of the things that come along with it, all of those ideas are not meaningful without
Hmm.
having a core purpose. And our core purpose is really to provide value with everybody that comes into our world.
Gotcha. Okay, well, that's great. I got a question for you. Growing up, I was always fascinated by vending machines, anything having to do with vending, because I grew up in New York City, and I would stand on the train platform waiting for the train to come, and I would like look at all the machines on the platform and think to myself, I'm standing here waiting for a train. Someone else is making money, and they don't even have to be here. Okay,
Right.
which was sort of a beat the system mindset a little bit. And then when I got older, the thought came about payphones, and the thought came about laundromats, all the same kind of thing. And you're dealing specifically with self-storage, which I kind of almost see like vending machines in a funny kind of way. How did you gravitate towards that as a core investment?
So my brain, being a systems thinker, is always thinking about the equation of maximum efficiency and
Hmm.
maximum return. And in order to achieve that, it's how to put out the least amount of effort and get the greatest amount of return, and then your margin is within the two. So
Right.
when we started getting into when we got into real estate, it was scaling and acquiring locations. Every individual location was a product of its environment. We had the management system on the back end, but the part when it came to residential real estate that impeded scale, if you will, is that we're managing properties where people and humans interact and live in. What that means is that when somebody is living within a property, they are using it, there's a lot of wear and tear. And so the turnover, the repairs and maintenance and all of that really turned into every, couple of years, depending on how long a resident stays in a property, you've got to
Right.
invest more. And the idea there is if you invest the right amount, then you can technically improve rates and your market positioning. When it comes to self-storage, however, you're talking about a metal box, right? And I tell people whether it's Miami, New York, and Los Angeles, a self-storage facility doesn't look similar. It looks exactly the same. When you roll up that door, the product is exactly the same. So it's really
Right.
about scalability. On the back end, right now we use CubeSmart and Extra Space as our management platform.
Hmm.
They have extreme scalability because the product type is not market dependent. It's the same product. So now the factors that come into play are really who are the customers, right? How to run the store as efficient as possible. You have some
Hmm.
weather, but ultimately it is a data business just as much as it is a storage business. So I like to say that self-storage is a dynamic business with the beauty and benefits of real estate. What that means is leverage, right? You borrow money from the bank, investors invest with us,
Hmm.
acquire sites. On the back end, it's managing data, understanding what is the price for any given unit in any given
Right.
market for any period, whether it's during seasonality, et cetera, et cetera. So the beauty of
Hmm.
it is both the simplicity of the product and
Hmm.
sophistication of the management strategies, and the bigger the spread between the two,
Hmm.
more forgiving it is from an investment, and also the better the yields are. And that's really what the attraction is. Now you factor in market fundamentals like housing affordability.
Yeah.
What's easier to rent a or buy a bigger place or just get storage, right? Storage is an easier way to manage your
Can
lifestyle,
be.
expand, contract, whatever the case may be. So there's a resiliency depending on whether the market is expanding, contracting, so on and so forth. So there's a lot of beauty in that simplicity.
I would imagine self-storage is a very consistent business. It doesn't change very much between market volatility.
That's correct.
Uh,
During the go back to the great financial crisis, it was the only real estate asset class where there was a positive return on investment during those years. All other asset classes lost money, and that's because
right.
in the expanding market and markets that are contracting,
Uh-huh.
there's consistency there. It's a different customer base. It's a different need.
Got it. Got it. No, that makes perfect sense to me, at least. I hope it's making sense to my audience as well. Um, Okay, it reminds me going back to the laundromat analogy. It reminds me of that a little bit in the sense that people have to wash their clothes regardless of the stock market, and also it, tell me if I'm on the right track. It's also a business that has very little in the way of salaries, employees. It's unlike most businesses that are very staff centric.
Yeah.
Storage like laundromats is not. Is that correct?
That is correct. We typically, depending on the size of the store, the location, typically it's one, maybe two actual employees or managers. Uh,
Right,
the internet, mobile phones, you could reserve and move into a unit pretty much nationally just by doing a search of self-storage near me, self-serve. The person there that is working the location, they're facilitating move outs and making sure that units are cleared out. They may handle some auction components if somebody is delinquent,
right.
but by and large, they're providing a little bit more peace of mind that someone is there. But
Hmm.
for the right, for the individual that's tech savvy, they don't really need to interact with a human. And so it is very relaxed when it comes to payroll burden and the margins. Just to give you an idea, most locations we operate with 65-70% margins, so the expense load is
Wow,
very low.
got it. Okay. Well, I mean, I would imagine, the tenants don't have to be that tech savvy. You just have to press some numbers on a pad to get the car in, all right? And then and you get in the door, and then you open up your own lock on a
That's
locker, right?
Yeah,
Okay.
and in many cases, we have even gate controllers now that are tied to your mobile phone that will detect through NFC and different Bluetooth technologies, detect you as a client and open up the gate for you.
Wow, that's cool.
Yeah,
That's
so
cool.
so the technology component of self-storage makes the product an easy to use.
Hmm.
We support many small businesses, many e-commerce businesses that need a place to store
Stored,
inventory.
right.
And really, that again goes back to the beauty and the evolution of where self-storage fits in the not just the service segment, but also in the investing world as well.
I would imagine I would imagine for somebody starting a small at-home business, having a storage facility might almost be a requirement. Unless, of course, you want to fill up your entire apartment with stuff.
That's right. That's right. There's plenty. There's a many small businesses that can manage their inventory. Many farmers markets. Depending on where you're
Right.
located and the product type. I mean, there is the climate sensitivity, but there are climate controlled. A lot of the products are climate controlled now. You're not
Hmm.
going to keep perishables and those types of things, but from a broader small business perspective, absolutely, that's a big portion of the client base.
Makes perfect sense. So, from an investing point of view, why would somebody look into this over other what I would call aggressive investments, such as investing in mortgages or what you were talking about before, investing in residential real estate? Why would somebody
Yeah,
as a either want to shift to this or maybe just add this into their portfolio?
that's right. So the way that we think about it is that the risk return metrics are phenomenal, right? For all the reasons that we talked about, the simplicity of the business, that also reduces any inherent risk, right? It's not as cyclical as a lot of real estate. Residential real estate right now, we're seeing rents retract in many markets, and
Yeah.
the bigger the asset, the higher the value, the bigger the impact to the bottom line will negatively affect value. Self-storage, typically, depending on the location, your location in Los Angeles, that real estate is going to be far more expensive than say where
Hmm.
we are at. But typically, you're looking at
Yeah.
a 10 to $15 million investment for a given location with those high margins and very little and controllable expense ratio. So the way that we like to position it is that we are likely not going to be your top performer in terms of if you're investing in, say, data centers right now, the return expectations are significant. Real estate or residential office sector, offices in its own having its own challenges, but self-storage is kind of the way that I equivalent it to is it's that drive, not that long drive right down, but it's right down the middle of the fairway. It's
Uh-huh.
safe. You're not risk going into the deep rough. There is a lot of margin of error within the real estate,
Yeah.
and it should absolutely be a part of everyone's portfolio. We also have a private credit component, so we do have mortgages, but they're also tied to self-storage. Self-storage historically has the lowest default rate of any real estate asset class. So when you're looking at it from a safety perspective,
Right.
those are the big drivers. And then obviously what we talked about earlier, the service component to it. It's got a lot of the components that make the ideal business these days subscription model. People put their unit on auto pay, so it comes out of their on their credit card every single month. Uh, they can move in electronically. We have a lot of data to understand behavior. Dynamic pricing. Prices can go up on Thursday and plan for the weekend and then go down on Monday. Similar to an airline, similar to a hotel, you have that data to be able to dynamically price to make sure that you're getting the optimal revenue.
I want to spend a couple of minutes on dynamic pricing. There's been a bunch of articles recently about dynamic pricing in supermarkets. First, we're going to take a short break. You're listening to Reverse Your Thinking. I'm your host, Mathius. Our guest this afternoon, Sergio Altomare, and we'll be right back after this.
If you are facing divorce or separation, attend the Divorce Options Workshop, a low-cost public education workshop presented by experts who have guided other people through divorce. Experts include lawyers, financial specialists, and divorce coaches. You have choices. Divorce Options will help you understand and manage the legal, financial, and emotional aspects of this challenging life transition. Divorce Options will help you explore your process choices and make informed decisions about which process option will most likely lead to your desired outcomes. Divorce Options will help you take control of your divorce and move forward with your life, with guidance from trained divorce professionals in law, finance, and counseling. For more information, go to divorceoptionsinfo.org and sign up today. That's divorceoptionsinfo.org. Take the first step toward a respectful transition. Divorce Options is presented by Collaborative Practice California, a volunteer-run organization.
And welcome back to Reverse Your Thinking. Sergio, just before the break, we were talking about dynamic pricing. This is something that's been in the news quite a bit lately. Can you explain to our audience how that works and then tie it into what you're
Yeah.
doing?
Yeah, so this is where my background in systems and databases really comes into play, and obviously most people are well aware of AI and AI's implications in a lot of things that we do day
Sure.
in and day out, and it really is about analyzing large swaths of data and being able to understand supply and demand, right? I
Hmm.
can't speak to, I'm not in the grocery or the supermarket industry, but what I can
Right.
tell you is related to how airlines think, how hotels think, and how we think in self-storage is
Hmm.
we know where occupancy needs to be, right? So I'll use the analogy of a hotel and correlate it back to self-storage. With a hotel, typically you're targeting in the 90% in terms of where you want to be for occupancy for any given night. And
Okay.
as same thing with a sports ticket, the closer you get to that night, that day, the lower the inventory available, then the pricing has to grow according to that demand. So dynamic pricing is really just understanding where you are positioned as it relates to occupancy and pricing within any given market. And then it's a function of supply and demand. With AI being able to ingest and analyze large volumes of data, the dynamic pricing component really now is far easier. It's digitized. You've got computers making those decisions. It's prevalent in every part of our life, from searching online for a particular product. Say you're looking for a mattress. Now all
Mm-hmm.
of a sudden, every time you pull open your browser, somebody's trying to sell you a mattress because the data is there. It understands behavior patterns.
Mm-hmm.
Now the pricing continues to evolve accordingly. It's in the stock market. There's a lot of algorithm trading going on. The
Mm-hmm.
pricing, once it reaches certain triggers, there's buy orders, there's sell orders. So it is a function of just applying automated and technology to be able to optimize your pricing for any given
Mm-hmm.
within a market.
Okay, but by the same token, a lot of people feel or believe that if you're searching for something, just the searching of it will raise the prices. If you're looking at, is that true to the best of your knowledge, or no?
No, that's probably a little bit more of a misnomer. I mean, it
Okay,
is a
good.
function of, yeah, it is more of a function of how is it priced within a set of competition. Like for us,
Okay.
when CubeSmart and Extra Space are pricing a 10 by 10 unit, that's the most common self-storage unit that we have.
Mm-hmm.
They are evaluating the prices of that same unit size within a market. Now, if someone
Mm.
came in and said, "Hey, for my business, I need 15 of these," and they rent
Right.
those, then that can accelerate the pricing dynamics. But typically, the search results can result in a leading indicator, meaning that if you're seeing a huge spike of search for a product, and you know that as a result of that increase in search, then
Mm-hmm.
the demand follows that, then obviously your pricing is going to change as well. So
Gotcha.
that's where that can come into play.
Okay, let's segue a little bit into risk versus reward. Okay, um, many people, especially people on reduced fixed incomes like retirees, are always debating risk versus reward if they have money, if they've been fortunate enough to retire maybe with a few $1 million, so that they have an income coming in. They don't want to be too aggressive and
Yeah.
and upset the apple cart. So they'll look at conservative investments like CDs, or money market funds. Um, and you're talking about an investment that you say is fairly evergreen. Why would somebody like that want to choose investing in storage facilities through your company versus putting money in a safe haven like money market funds or blue chip stocks?
Yeah, so there's a few components that we help educate our investors before working with us. And really the way that I think about it is all investing decisions should come down to two things. One is your personal and household risk tolerance, right?
Hmm.
We always advise the adult parties in any household should be on board with any investing strategy. Okay.
Okay.
The next component is alignment of interest with wherever you are investing, right? And understanding that risk reward dynamic. In our
Hmm.
case, there is an illiquidity premium, meaning that if you're investing in one of our growth strategies, which is typically a 5-year investment, but I'm looking to double the value of your principal, right? That's an average of 20% return per year. That is
Right.
the premium that you have to pay for one, for not being able to access your investment for 5 years, but also to outperform other investments like a CD, et cetera, et cetera. The other factor that I would say is, depending on where you're at in your journey, every person's journey is,
Right.
you go through your seasons, you go through life. It's really to be invested in the right portfolio that, one, aligns with your personal lifestyle and goals, and
Yeah.
number two, your risk tolerance.
Hmm.
We advise, like, we have a private credit fund where you can invest in as little as redeem your investment in as little as 6 months or 2 years, depending on the return and the size of your investment. So we try to position our investments to, one, be as aggressive as we can in terms of providing a really strong return,
Uh-huh.
but in comparison to alternate other investments. We operate in the alternative investment world. Traditional investments are your CDs, your money market accounts, your equities. Those are very liquid. You can, buy and sell typically,
Hmm.
in the same day. So really, it's about risk tolerance. I tell every investor to, number one, is be educated. Be educated about all of your investment options, and then make a determination as to what is the right portfolio for where you are at in life. I mean, there are things when you're early in your
Right.
30s and your high earning years, be aggressive. Even when I was working at the Fed in my 401k, I was putting away as much as possible. Then when you get to the middle age, and I'm about to be 50 years old, I'm still trying to be as aggressive. Now I'm investing in our company and our growth. And then
Right.
we have investors that, once they transition into, say, their 70s in life, now they're focused on creating income streams, and also legacy planning, right?
Hmm.
Philanthropic ideas. So
Right.
it's really about understanding where you're at within your own journey, your family journey, your goals, and then making those investment decisions accordingly, and then really
Let,
being diversified within your portfolio.
what's the average length that one of your investors will quote unquote tie up money and make it illiquid with your company?
So we have investors that have been with us for over 10 years since we
Hmm.
started, that they have continued to roll over their investments. So
Gotcha.
one investment exits. The typical individual investment, and this is true of most private equity, your Blackstones, Black Rocks of the world, is
Yeah.
5 years, right?
Okay.
5 year time horizon that consists with 5 year loans, commercial mortgages, et cetera, et cetera. So that's the most typical time horizon.
Let's drill little bit more into this. We're going to take a short break. You're listening to Reverse Your Thinking. We'll be right back after this. And welcome back to Reverse Your Thinking. We were talking before the break about making investment money illiquid. All right. And you were saying that on average, your investors, quote unquote, tie up their money for about 5 years, give or take.
Per
Right.
investment, yes.
Okay, fine. So unlike a CD, which is liquid and is paying, you know, 3, 4, 5%. All right. What's the incentive for somebody to invest in self-storage facilities? All right. Assuming that they're as safe as, all right, CDs, relatively speaking, um, and tie up their money for 5 years. What's the investment incentive to do that over CDs or money markets?
Well, the first and easy part of that is obviously the big difference in return projections. When you're looking at a CD and you say you're getting 5, 6%, depending on, even less in many cases,
Right.
versus one of our growth strategies, my focus is generating 20%. Now, the alignment of interest that I talked about earlier is really the incentive that says that in most cases, there's a preferred return. The preferred return means that our common equity investors, which is our everyday investors, they get the first 8% per year of profits, whether through operating cash or it's accrued if that's not generated, during the hold period on the back
Right.
end. So the first 8% goes to investors. That means that in order for me as a firm to share in the profitability and the value creation, I've got
Uh-huh.
to give investors 8% per year. So the alignment there is a given, right? I've got to perform, or else as a company, we don't do well. All right. Then from there, it is around the illiquidity premium. We've got to be able to generate outsized returns in order to be that alternative investment strategy that generates the higher return. From there,
Hmm.
it's really just a matter for the individual investor, again, going back to their risk tolerance, where their capital is needed, making sure that they can tie up their money for that period of time.
Hmm.
Then there's tax incentives, right? If you're in the real estate world, there are taxable losses from depreciation and other aspects of the investment that can help offset other passive income from other investments. So there's big strategies there.
Got it.
Many investors invest using their retirement accounts. You can convert, many individuals don't know this, but you can convert some of your IRA, 401k through a company into a self-directed, and not just
Hmm.
invest with a company like us, but actually control investments on their own. Maybe you've got
Right.
a nephew that's got a startup business and you want to invest. It's a little bit more of a risk, but it allows you to have greater access and greater control than what you might see as conventional investments that are highly marketed. And oh, by the way, the incentives for a lot of those other conventional investments are commission based. So we are aligned by we have to generate a return. But if I'm only getting paid a commission, like many wealth advisors and that kind of thing,
Right.
the alignment is different.
Gotcha. Okay. So you're guaranteeing 8, but your goal is to pay your investors 20?
Yeah, we are there in the alternative investment world. Nothing is guaranteed, which is
Of
why in
course.
many cases it's restricted to accredited investors. There's no
Hmm.
quote unquote guarantee. But if we are profitable, if an investment is profitable from a cash flow and from a
Hmm.
value creation perspective, the first typically it's 7 to even up to 10% of those profits per year gets returned to those investors before we share in the profits.
Gotcha. And how many storage facilities is your company managing at this point?
We have 23 active stores with a couple that are in ground up construction.
Gotcha. And does Hearthfire Holdings also own the land, or you're leasing the land
That's
for
right.
these?
No, we 100% owned all the land.
So you're the owners of the commercial real estate. You're the owners of the building. You control all the variables.
Absolutely,
Gotcha.
100%. And our and
Okay.
our managers are strictly managers. They have
No stake.
no stake in it. That's
Oh,
correct.
okay. And what's been the average occupancy over all of these facilities, 24 facilities?
So depending on where they're at in the business plan, we stabilized occupancy is north of 90%, right? That's
Wow.
that's our target occupancy for stabilization. That's true over the industry.
Uh-huh.
Post-COVID from 2021 and into 22 before interest rates shot up, occupancy was mid 90s and high 90s because the demand had exploded post
Right.
COVID for people needing more space for a home office, for a home classroom. It
Right.
created a whole new generation of individuals that understood this storage is and product that has a place in their life.
Okay. Let me ask you this. I mean, right now there's a housing crisis in the United States. In addition to that, we've had 25% increase in prices over the last 3 to 5 years. The middle class is being basically displaced Homelessness is on the rise. Where do you see storage facilities fitting into this? And is there a risk from an investment point of view of people actually starting to live in these type of facilities?
I'll answer the last part of that first, in the sense that there's security controls and legal components, and as well as temperature and those types of things that would limit. Have people tried to live in a storage unit? Yes, they have. Are they going to live in our storage units with our managers? No, they will not. Every facility is evaluated and does the walkthrough twice a day. In
Okay.
terms of its position and its relationship in the broader condition of the economy, storage is a service that helps an individual that says, hey, I can't afford a 700 square foot apartment, but I can afford a 600, and I can get a 10 by 10 storage unit and really be able to control my belongings and those types of things. It's very much part of the transient component there. But the way that I think about it is every investor should acknowledge that real world inflation in every cycle is over 10%. You only got to look at your real world spending. The CPI, they are based on, they omit food and energy, but we know that those are critical for our lifestyle. So I would say that you have to invest some portion of your investable income and assets to generate outsized returns. Self-storage is a place where you can do that.
If somebody that's listening to us today wants to get a hold of you and discuss making 20% on their money for the next 5 years, where can they get a hold of you? What's the best way?
You'll see my name in the show notes. You can do a search for my name, and I will come up in many search results. hfirecapital.com is our website. You can look me up on LinkedIn. Shoot me an email, sergio@hfireholdings.com or investors@hfireholdings.com, and we will start with just a casual conversation. On our website, we have downloadables like white papers on self-storage, private credit, those types of things.
Gotcha. Okay. Thank you so much. I really appreciate you making time this afternoon to come and talk to us. And I have no doubt that there are people in our audience that are feeling the same way. So I have no doubt your phone's going to be ringing soon.
I appreciate it. Thank you, Mathius.
It's our pleasure. And thank you for listening to us again. If you're on your way home, please be safe. And when you get there, make sure you give your family a big hug. And we'll see you again next week right here on Reverse Your Thinking.
Where the living is good.